Hey guys, I'm making this video after a long time. I'm not making this video, unlike the other videos, I'm not making this video for myself as a vlog, but for others to understand. So, what I think is Indian stock market is in a dilemma where uh, everyone thinks the stocks only go up. Now, the entire economy is going to be in a cyclical slowdown in financial year 25. That's it's already showing in most of the stocks, but I don't know why many people are still investing at this moment of time. But usually, you should not, or you should pick only specific stock which are actually giving good return. So I don't want to specifically tell which stock to pick, but I'll just see and show you what I'm seeing with my eyes, and you can go through this article and also the multiple other articles which you can go through. But ultimately, this is Crystal who has published it. But now let's go to asset management. So if we see the equity schemes, that is in mutual funds, the equity schemes have crossed more than income schemes which are fixed deposit or bonds or debt funds. More than that, equity schemes have crossed the value in terms of that. It has crossed and it's higher than that. Usually, if we see gold ETFs or other things, they are negligible. But if you see income, that's the highest thing which is people are concentrating on. There are other things also which you can go through, but I'm not going through them right now. What I know is basically, first is, let's say, coming to Maruti. What is happening here is they have reduced in number of sales, that is minus 7% quarter on quarter growth, that has reduced. So I think even Maruti will stop producing for this financial year because they have abundant quantity. This was shared by someone else, but yeah. Now coming to this one, this is Tata EV. They expect the EV sector to grow and everything to grow, but the sales of this quarter were terrible, and this is where the slowdown has started. But I let's not just go by these figures. Then I went to, these are the consumer data though, so the vehicles are mostly being purchased by the end consumers. So I went to Ashok Leyland to see how down it was. So Ashok Leyland's sales were down by 8%, and heavy vehicles is down by 12%, and truck sales was down by 20%. So these are huge numbers in terms of automobile, but this doesn't impact only these will be impacted. The remaining sectors will also take a big hit. So my look towards this has started with, because of one of the stocks which I hold, the quarter on quarter growth was 92%. The sales of the marriages or whatever, the economy is not good, so the quarter sales were extremely down. The year on year sales were down. When I went to Vedant Fashion to see that, this was the exact trend. Why would the year on year growth be down for marriages in a growing population country where the middle class aspirations are high? What's happening here? Are the Gen Z or the millennials are not marrying, or what is happening here this year where they're not what's happening? So I guess there is a huge job loss because of that. These two segments of marriages have not functioned well this year. Now let's go to Sai Silk I have already shown. Now let's see Avenue Supermarket. This had a steady growth of 20%. So this gives us some kind of a good story that people have a great they want to buy products at a much discount. If you see, growth has been really high in Avenue Supermarkets, so people are spending conservatively. That's a good approach. This is when you predict that it's going to have a good slowdown. Now let's go to Trent and Zodio. Also the growth is good here. So this is giving me some kind of a idea where the purchase patterns are happening. So these are most of the stocks which I'm showing here specifically. The big purchases are not happening, the small purchases are happening. So the economy is not terrible, but it is going to slow down, not drastically, but in a slower fashion. So, and the main concern which I have is about this, the equity investments which they have kept. And if you see also the SIP month on month inflow, it has been higher. So people will start uh, taking off these things, and I don't think it should happen all of a sudden as a panic, but if it does, there'll be huge panic selling. And this whatever investment schemes are there, whatever investment vehicles are there in equity, that might have an effect. So I don't think people are going to suddenly take it off, but I see a pattern where few companies, let's say I have always been active on Reddit or against few companies. One of them is E2E networks. Even though the growth is really high, the valuation is extremely unrealistic for the growth of the company. So I think people, specifically the retail, so if we see the shareholding pattern of this company, the FIIs, whoever have invested, there's no proper FIIs who are investing here, but but if we look into this, the promoters have the shares, and who is going on taking this purchase. See the FII's positions and the others' position. The others have kept on purchasing. Individuals less than a lakh have been purchasing the stock. So only they have been purchasing, and what prices are they purchasing it at? So this is a small example. This is an extremely small cap, but let's see what was the earlier cap and how X returns it has given. So if you see here, it has started from around 200 market cap company to, or 300 market cap to a 10x company. So this kind of market cap giving it this kind of valuation is unrealistic. And also if we see, they have been growing in debt. And also recently what I have noticed is MTNL, they were participating in this, and if you see the pump and dump of the stock, it has gone from uh, 33 as a price to almost touched close to 100, and then went down to 63, which is not great because the company is making losses, and also the revenue has been down just on a rumor that BSNL might merge. MTNL is one thing, and people are shifting to BSNL from Geo because of the lower prices is another thing. But these news shouldn't be massively impacting the stock. And also there's one more news that the government was going to repay all its debts, but still the company's assets and the debt which they are clearing are not going to match. And as a debt, and if we are holding debt in MTML, that's good that the government will repay. But if you're holding equity in MTML, the government might close it down someday. So what do I talk about the equity holders of MTNL? So yeah, there are multiple stocks like this. Even let's say Suzlon, for example, the energy stock. So if you see the growth rate which it had from almost 9 rupees to 75 rupees, almost 10x stock. What fundamentally changed there and what happened here is this, I guess the sales has grown a bit. Let's see what was the scale. So overall, the sales growth has not even come close to the, but they have books on energy. So I think, but ultimately, what I am trying to say here is giving them a 10x growth for this is completely not great, because market participation has been terrible here. and even giving that kind of value to a stock which has lost trust of multiple investors. Let's see even the shareholding pattern here, what has happened. So the shareholding pledged shares have been removed. Who is buying the shares? If we see the blue tick, it's others who are buying the share. FII holding has also increased a bit. FII holding has increased to 24%, but more than that, if you see the others and mutual funds also have started holding this stock, but the others percentage has increased a lot. I don't want to comment on whether the stock is good or not, but making it a 10x and the market cap of 1 lakh crores for a company with the valuation of sales to price of 15 from 1 or 2. I don't know where the mutual funds are putting their money, and I don't know whether Suzlon will justify that valuation. But ultimately, what I'm noticing here is a pattern where everyone is trying to invest in every stock possible which they are getting, and always, if I notice a pattern there, these were all the stocks which are penny stocks. So the market is acting unrealistic with baseless stocks. I mean, I don't want to comment again, but yeah, let's see. Inox has been priced there, so let's not see book value. So now the book value of Suzlon is price to book is 27. So I don't feel these values can be justified in the future. But I won't be talking about the stock anymore. Yeah. So there are multiple stocks like these, not just one or two. There are tons of stocks which are in the same pattern. I don't say that having a small cap is bad, or having a multi-bagger like Suzlon is unrealistic, or E2E. If you have it, it's great. But what I am trying to say is people are still purchasing the stock. People are still purchasing the stock even after reaching a valuation which has been non-existent. Let's say, for example, let's take this case of Switzerland. I've never seen that. Let's remove Inox. So in the past 10 years, the price has never seen the valuation of 15 price to sales, and suddenly it has seen. What is the optimism behind this is I don't understand whether the retail or the mutual funds who are holding it, what can be the reason behind it, or can it also grow 10x from here and it justifies the valuation? I'm not sure. Another prime example, not in small cap, is Adani, which has grown again in the enterprise, is in 80s 87p ratio, basically for a stock which runs the infrastructure. Which infrastructure company is getting this kind of valuations? Adani has justified, and having a government support throughout, and being a crony capitalist, he has proven this stock is cheap. But ultimately, having at such a high valuation, I guess the investors who has invested early are lucky. But I feel bad for investors, or investors might get stuck with the stock if they're purchasing at this high prices. When there is a market crash again, it might come back to these prices or not, we don't know. But there are multiple instances where the prices might not come for a decade. Let's take one of the example of Tata Power in this case, right? If we take Tata Power historically, if we take 10 years, it has always been the price of 120, which it reached in 2010, wasn't there until 2020. So for a one decade, last one day, or from 2010 to 2020, there was no price of that, and in the crash it fell down. So investors were stuck for the stock almost a decade, and they might have lost their hope here and the price fell, and then now the stock is at 400. Again, this might be a decent valuation right now, but you are stuck for a higher valuation. If you're paying a higher price for a stock, you're stuck in that higher price for a long time. So here, if you see it was still in 0.93 price to sales. I don't want to just show price to sales or P ratios or price to book, but ultimately these are the baselines of how you compare the stock with itself or the segment it's related to. So when you see the stock which was trading at 1 is now trading at 4, the optimism behind it can drive the stock down when there's a crash. Again, the values which it has right now can't be realized. So if someone has bought Tata Power at 3.69 P ratio in 2010, and now if you see the price of 2010, that wasn't realized. If you see that, it wasn't realized until a decade. So when you are paying a huge price when you're purchasing a stock which might not realize the valuation which you are expecting. So just be cautious here when you're investing in a high value, when everyone is having a good festival, that celebrating that they're making high return. You have to consider, why is it making a high return? Is the valuation decent, or is the valuation making you fear of the stock? So the current valuation, I appreciate, I was a Tata Power stockholder, but I don't think this valuation which they have is justifiable. But the stock and the price of the stock can be overvalued until the time you can't imagine, and it can be undervalued. You don't have a time for that, so you just acquire when it is an undervalued stock, and you don't exit, or you do coffee can or anyone, but do what you were doing best, and whenever you feel that you fear that's overvalued, consult someone who understands the business of this, or understands the fundamentals. So you shouldn't be panicking when the business is going down. So let's say if you really trust something like Tata Power or Adani Power or whatever stock, you have to understand the complete company and the story behind it and invest in that, rather than just fixating on something that someone else has suggested and then go by that and be fooled with the stock. Because everyone in India, specifically the Reddit community and also the news channels of India, are and will keep giving suggestions. They have been giving suggestions for past 20 years. Indian economy has been performing really well for over 20 years, but that might not be the story. One of the example which I was observing today was this is how we see the pattern, right? Okay, this is 2016 cycle. I'll take it further back after. Yeah. So if we see this cycle, we are right now in an upper band. So usually India has to be in an upper band because it's a developing economy. But now what would happen is, when there is a slowdown, it would reflect something like in 2016 or 2014, where there will be some kind of slowdown. So this is just technical analysis, and again, not technical analysis, I don't completely believe in it, but just because a trend of general markets and the downtrends of the usual economical cycle runs in a logarithmic way, where it it goes in a specific trend, right? So let's say India is going, the GDP is growing by 7%. So that is also a trend which we have to follow. So if the economy slow downs, so the past economy, how it has been when it was in a slowdown. So if we see from 2011 to 2016, around 2017, we were in a massive slowdown cycle. So we can predict, or this is just a wild prediction, but it might. So take my words like a 50-50 and take it with a pinch of salt. Don't directly go my words, but because of all these factors, what I would suggest is, what I would not suggest, but what I would try to tell here is, it can go down and sit in the lower band rather than the upper band, is my analysis. So I'm not recommending to just sell because it's this or buy, but you have to have the entire vision on what has actually made you decide or purchase a particular stock. What was the initial goal which you made the decision for? Was it for retirement? Was it for education of your child, or was it for a tour, or was it something else? So that if can the present cover that expenses, or will you be, can you handle a crash? So these are all things which you should have considered even when you entered it. But since equity and share market is subject to market risks, you have to be ready for a 30 to 35% crash anytime. Not just because I'm saying it would crash. It won't be crashing, or it might be crashing anytime, but don't go by my word. So let's say, for example, if someone has bought, I'm going by Bank Nifty because of the volatility and the nature of volatility in it. So if we see in 2009, the COVID crash, it has almost fell to 50%, after which it recovered, but it took some time. So you have to be ready to handle panic, and once it has recovered, it has given a return from there. It has gone to 71% from there. So it has taken some time, almost close to a few years. COVID recovery was extremely faster than any other crash. So if we go to the dot-com bubble, or not dot-com bubble didn't impact bank stocks, but it has impacted a lot on tech stocks. But if we go to the housing crisis, after housing crisis, we had a crash. Sorry, wrong diagram. Yeah. We had a crash close to 67%. So yeah. I won't say, I don't want to panic you saying that it will fall down such a drastic way, but that's a reality of stock market. Since if most of the investors, even by this pattern, most of the investors who have joined the stock market after COVID will have only seen the uptrend of the market. And those who have seen even Harshad Mehta's the show, the Scam 1992, I guess. Yeah. So even that shows only the up move of the market. That has also the downfall, but you have to understand that market was completely different from what we are seeing right now. And this crash recovered faster, but usually markets don't recover faster. So let's say in 2008 till 2011 or 2011, so it took 1 to 3 years to recover in this phase, but you won't sell it again at highs. So let's see, when did this cross this particular channel? Took almost close to a decade, right? Close to a decade to cross. So, and sit above that and act, this is acting as a support. So whoever is purchasing at a highs should be completely careful of that and should be able to bear that kind of moves. So if we see in 2016, this is when I would say you basically uh, are making less than the interest rates of the bank. So sometimes FDs would be much better and fixed deposits would be much better than equity in this kind of scenarios. Again, I'm not going to scare you, but these are realities which you have to accept when you have, because most of the investors have only seen the upside of the market and you are fairly new to the market. So this will be a video for myself and also a video for you. Okay guys, thank you for watching my video. Bye.